Hello, good day, everyone. This is Seewing Yee from the Yee Real Estate Network. Once again, thank you for attending on this short video presentation. Once again, I'd like to direct your attention to this particular property. Just came aboard just today, so in this video I will make it real quick and easy because yeah, as you see on this newsletter, we have all the backup information, the pictures of this house, the video of the neighborhood, and the a similar projection analysis also in the body of this newsletter, and of course all the underlying information about the Detroit market. So suffice to say, this particular newsletter on this Detroit property presentation is it is our goal for you to make an informed decision about buying this property. And once you do all the due diligence and your research in a way that we did it ahead of time, you will see the from a logical and rational basis, this is a very good purchase, in my opinion. So again, I'm not going to spend too much time on it because this particular video and the underlying data that you see in the bottom of this newsletter, you will clearly see all the substantiated information for your review. So again, this property is located at 15775 Appling Street, Detroit, Michigan 48227. And the square footage is 1,074 square foot. And the initial our listed price is 45,000 and all cash or IRA purchase. And with the estimated depreciation closing cost of 1,000, so your total out of pocket is 46,000. And this home has been leased already, has been rehabbed, and the renter is in place, and the renter is paying $750 per month. And because the taxes on a monthly basis on this in this location is very low, a mere $112 per month, and the property insurance similarly low at $37, and property management at $75 per month, and at 10% of the rent. So total operating expenses is $224, and there's a whopping $750 gross rent minus $224 obligations equals monthly net cash flow of $526. Wow. On an annual basis, your annual net income on this property is, based on this projection, is $6,317. Okay, so again, this is just a projection, and the disclaimer is such that the actual performance may or may not reflect these numbers precisely, but it is a mere estimation and a cash flow analysis as we present this to our investors or anybody else out there. And the all important numbers, which I have taught many of you already, and if you do not have an understanding of this numerical analysis, let me know, and I will be more than happy to shoot you over a video that clearly explain the importance of, as a real estate investor, understanding of the numerical metrics, which is let me briefly share with you, which is 1.7%, which is the rent to value ratio, which is mind-boggling because anything at 1% of the purchase price indicates a very good purchase with respect to the cash flow monthly and annually. And so this is so the benchmark is really 1% of the purchase price will give you a cash flow, but oftentimes in other areas of the country, the investment home purchase is even below 1% ratio. So in this particular case, it's 1.7%, which is, again, I must say is quite attractive. Something I have not seen personally. I don't think ever before. So similarly, capitalization rate, which is another very important numerical benchmark, at 14%. So anytime you see a double-digit capitalization rate, again, it indicates a very, very high cash flow, very attractive investment relative to the benchmark. And of course, cash and cash return similarly 14%. And finally, the most important number is really a pure 16% return on your investment. So it's more than a double digit return, which is obviously it clearly is much better than the stock market in terms of a historical performance with respect to real estate. All right, so I think there's nothing more I need to say because the number speaks by itself, right? And yeah, it's a very good purchase, and feel free to look over the remaining data that we have for you, and with all the links and that we have that to support our data and our projection and the future growth of this great Detroit market. Most important thing is my summary, my recap of this particular presentation is such that you buy Detroit right now, which is at the bottom of the real estate cycle. So this is a very important to time the market. And furthermore, this is according to Forbes magazine is the most undervalued real estate market in the country. So a lot of great potential in about Detroit. There's a lot of growth, a lot of great information going on with the rebirth and renaissance of the Motor City, USA, right? So this house will go very, very quickly. So if you're really interested, if you have the cash available or your self-directed IRA you have, which many of you do, a mere $45,000 is all you need. So instead of using $45,000 to buy a car in the Bay Area, many of my investors are located in the Bay Area, and many of you have full capacity to buy a car. But why buy a car with $45,000, which depreciate in value? Instead, use your $45,000 of cash or IRA to purchase a income producing asset and with a lot of future potential and tremendous cash flow and net income and passive income available to you in a turnkey status and managed by a great property manager that we have here in Detroit. All right, so that's all I have to say. If you're interested, please contact myself. Then I will go over your situation. And if you're ready to go, I will put you in contact with our Detroit consultant, Robert Culberson, and he will process the paperwork. And as a team, I will ensure that I will see you through from the entire process, from beginning to the end of closing escrow and beyond, so you can have a very good purchase experience. So you could buy more and also tell your friends about it. That we, as a network here at Ulysses Network, is continue to provide value properties to achieve your financial goals. All right. Thank you so much for listening. This is Seewing Yee. Looking forward to helping you. Have a nice day. Goodbye.